Hey YouTube, Everyman Prepping here. And it seems like countries are no longer just walking away from the US dollar, but they're running away from the dollar and its reserve status. We got a couple articles to talk about, one involving Egypt. First, please like this video. If you have yet not subscribed, please do so and ring that bell to get notified. And if you've subscribed recently with a lot of other people, thank you so much. I value all your guys' time that you spend with me here. So let's get right into the article. This first article is Egypt turns to the Chinese currency with Yuan denominated bonds. So not US denominated, not their own countries, but they're going to the yuan for their bond sale. It says here that the Chinese Minister of Finance, Mohammed Mayet, if I pronounce that correctly, announced during a press conference on the 29th that Egypt is planning to issue international bonds denominated in the Chinese yuan worth more than 500 million in US dollars. 9 billion in Egyptian denomination. 500 million, not that much. I think last fall Egypt did like 3 billion in US money, but the fact that they're not doing US denominated bonds and they're doing Chinese bonds starting at 500 million, even if it's a little trickle, is a huge sign that another country is walking away from the dollar, leading to the demise of the dollar. Continuing on here, we see that the ministry, he also added that Egypt has postponed its issuance of dollar bonds, and that's US dollar bonds, due to high interest rates. So higher interest rates, not as favorable to get US bonds, so they're not going to issue them. Going down further, what they're trying to do, it says there, Egypt's plan in issuing international bonds is to diversify the currencies in which it issues its bonds in the hopes of attracting new investors. That's a telling sign right there. The U.S. bonds must not be attracting new investors, so they're looking for other currencies from other countries to attract investors to buy them, to get money to fund their government. So very telling that the U.S. money is not as attractive as Chinese money at this point. And it goes on here to say that China has made it clear, and I've also done many videos in the past, I'll put some cards up, that it plans to offer an alternative to the US dollar as the world's reserve currency. They're going to do this along with Russia. And it says here that Russia's turned to China during the sanctions to sell them oil and get the money back in yuan or in rubles. It's working out great for them. The ruble is very strong right now. It continues to say that Singapore, Chile, Hong Kong, and Indonesia have also collaborated with China to create a reserve pool. Now, this is something new. I haven't really heard of Chile, Singapore, or Hong Kong being involved in getting in with BRICS and Russia to try to get into the reserves. That's even more countries. It's like I said, it's no longer just a few one-off. It's snowballing. More and more countries are running to this BRICS, running to this reserve currency, and the US dollar is going to be left in the dust. In March, it says Egypt became the first country in the Middle East to issue the samurai bond, which are yen denominated, from Japan, the yen denominated bonds which are issued in Tokyo. So in the Mid-East, we have Japanese bonds going now to Egypt, first one. I'm sure others will follow, meaning US bond again is not holding much weight like it used to. Going into a new article just today where it's talking about, don't be fooled by the strength of the US dollar. The US dollar, the Dixie index right now, one of the strongest it's ever been. It's very strong right now, but don't be fooled. And they even said down here, the first line, analysts invoke the old TINA argument. TINA stands for there is no alternative. And that's why it's going up. There's no alternative to the dollar compared to the European, the euro, the British pound, the Swiss money, all that. Compared to those, it's the best turd in the punch bowl. So that's why it's so strong right now. And it's going to discuss it a little further here. It says, at this time, the U.S. currency's decline could last longer than the 6 years it did in 2001, 2002, after the dot-com bust. Yeah, I think it'll last so long that it'll probably die as the reserve currency. It's just not going to be a few years. Going on, it says, the typical upswing in a dollar cycle has lasted about 7 years. The dollar's current strength has lasted about 11. So almost double what a current rise in the dollar has been in the past. So the higher they rise, the harder they fall. And currently it says the U.S. owes the world about $18 trillion. That's how many bonds we sold. That is 73% of the GDP. So think about that. Almost 3/4 of the entire GDP of the country goes to pay our debt. How high can that go before we're basically the United States is insolvent and no one wants anything to do with U.S. money anymore? We're almost at that point. The dollar has, and then we're going to talk about the death of reserve currencies through history. Reserve currencies don't last forever. They come and go, and history proves it's going to happen to the U.S. dollar. The dollar's been the reserve currency since about the 1920s, so it's held at a little over 100 years, which is longer than the average, which is 94 years. As you can see from the chart here, going back to the 1400s, Portugal had it for 80 years, Spain for 110, and then going up a little bit, France was the reserve currency for 95 years in the 1700s, early 1800s. Then Britain, 1815 till 1920, 105 years. Right now, the United States is on deck, and history usually repeats itself. It doesn't usually do something new, so it's a big sign up there as well. And then also we're getting on to which countries, what countries' currencies are held for reserve countries in other countries. A lot of countries hold the dollar, the euro, the yen in their own countries as reserves. But now they're saying that there's other currencies that are gaining in strength. The Canadian dollar, the Australian dollar, the Swiss franc, and then in the article it says the renminbi. Now renminbi is basically the Chinese name for the yuan. It's the official name, and the yuan is a unit of the renminbi. So it's basically interchangeable. So the yuan is one of the others that countries are starting to stack in their own reserve currencies for that country. So they now account for 10% of global reserves. That's up from 2%. So like I said before, as one thing gains in reserve currency, something has to fall. That's going to be the U.S. dollar. Now it says Southeast Asia's largest economies are increasingly settling payments to one another directly to avoid the dollar. We've talked about this before. They're just going back and forth with each other, sharing their own money. Maybe even starting. China was going to develop the food trading. They're going to trade just goods, maybe amongst some BRICS countries, so they can just trade, Argentina rice for Brazilian corn, or Chinese rice for Argentina corn, and just avoid money altogether. But going on here, it says that central banks from Asia and the Middle East are setting up bilateral currency swap lines, also with the intention of reducing dependence on the U.S. dollar. Malaysia and Singapore are among the countries making agreements with China to use the yuan between trade deals. No longer do they have to do everything in dollars. It's just more proof countries running from the dollar because they know the dollar is going to die. So these are two quick articles, brand new, letting you know that if you have a lot of US dollars, a lot of the fiat currency, you might want to start thinking about doing something with it. By the way, all these articles are listed down below in the description, so you can read these further and get into them yourself if you want to check them out later. But it's just more proof that as we move on here, that the dollar's getting weaker and weaker, inflation's going to go higher and higher, and once again, be mindful of what money you have in the bank, what you want to do with it, where you should put it. This is a time where I tell I'm not a financial advisor, not a financial planner, but it might be time for you to start thinking about moving out of the US dollar, like these other countries, and into other hard assets. Until next time, hope you're all having a great day. Keep your ear to the ground and head on a swivel.